Hey everybody, just a quick update here on the CPI print tomorrow. So tomorrow at 8:30 a.m. is a pretty pivotal moment for the overall stock market and the economic data that is set to transpire. The bond market right now is likely pricing in a little bit of a higher CPI print, given the fact that it has moved up in session. Now, overall, looking at the S&P 500, we're stuck at this one-year orange trend line. I think that if the print for the CPI comes in positive, being the fact consensus is 5%, if CPI comes in anything sub 5%, I think we're going to get a rally. I think we're going to get a rally up to probably about 417.22. I do think the max upside target of this next move in the S&P before we get our larger drawdown is 425. So that is your next upside target. I think if the CPI comes in hotter, we're going to get a move down to probably 400, maybe 400 around here. And then we likely get an intraday bounce that takes us back above this trend line around 404. So on the bearish side, if it comes in hotter and it pushes the market down, I'm going to look to buy around the 401, 400 level for a small technical bounce. And then if it comes in hotter, or if it comes in better and it rallies, I'll probably look to short a little bit higher above this red bar high if it pierces that level. So those are my technical resistance. If you look at the price action of oil is going to definitely reflect a higher amount of energy costs, being the fact that the month of April was much higher average oil price than the month of March. So definitely take that into account. I think this CPI is going to reflect a higher energy component based off of the oil prices and based off of the RBOB, which is the gasoline futures, which we'll pull up right here. So that's going to be interesting to watch too. I mean, the CPI print of this month is going to take into account basically last month's data, which is all the way from these pivots and then basically upwards of this gap over here. So fairly an elevated portion of the gasoline futures and oil that is going to influence the energy side. So we'll have to see which other parts of the CPI, whether it's housing, services, insurance, are going to do the heavy lifting for the markets. In terms of the NASDAQ QQQ, obviously it's tech heavy, but it does have some other staples, pretty important stocks. It is creating a wedge pattern. It is forming slightly a little bit of, it's too premature to tell whether this is bullish consolidation, but it is in the making to potentially form bullish consolidation. I think the wedge pattern to the upside is your highest move. The SMH is what scares me in terms of the semiconductors, because if the QQQs are showing much more relative strength than the SMH, that is a little bit of a negative divergence. If usually the semis lead, they are typically a Wall Street barometer of the QQQ health. And if semis are lagging, being the fact that they are way off of their highs of 131 in comparison to where the NASDAQ QQQ is, the Qs are pretty much at the highs when the semis are leading. Typically, the Qs play catch up to the semiconductor, so we'll have to pay attention to that aspect of the market. Natural gas was a pretty impressive mover over the last 3 days. It is holding nicely off of the lows, being defended. This is clear accumulation going on. We're going to have a nice range to trade against, basically from this double bottom zone all the way up to this $3, a nice whole dollar range that I think will ping pong in, but likely will eventually break out to the upside at some point in time. So I think the next big resistance is going to be this level over here. That's probably where you see a little minor profit taking, but I do think after a small little pullback into that range, you will eventually blast through this level. Thank you all for tuning in. Hope this video analysis helps. Definitely wait for a pattern setup. Let the moves happen first. Often algorithms will eat you up in the volatility. So definitely pay attention to what transpires tomorrow with the CPI print.